Hi, my name is Fulton Abraham Sanchez, and I am the CPA of the firm Fast CPA and Consultants. And today we are going to speak about tax planning for real estate investors. Once we have a client that he was worried about why paying so much taxes if I have a property depreciated. So after reviewing the tax return, we discovered that client was not deducting correctly the depreciation. He was using a different method. And second, the mortgage interest was not reported as an expense. We know that this happens many times with clients, and we realize that these are key principles for reducing and minimizing the tax liability when you are a real estate investor. So as a way to follow this and then give it this outcome, there is some tax principle that we need to follow for specific real estate investments. One of the things is depreciation, that many times is not correctly reported, as we illustrate in the case of these clients. There is also the interest expense that needs to be accounted for every time. There are some instances that this happens many times with clients don't have monthly accounting. In cases where the client decides to do the accounting at the end of the year, there is a lot of work to do at the year end, and as accountants, they are they are with so much work in tax season. It's not easy to account for the amount of time needed to do and specific financial statements and to provide this depreciation and interest expenses correctly as needed to be to reduce your liability. So, in addition to that, there is also some other tax principles that need to be addressed whenever you are doing investment. Many times clients, they ask, what is the best company structure for doing, for example, flipping, or for doing real estate investments, or for doing construction. In our experience, the best company structure when you are buying a property is an LLC. Now, if you are doing flipping, then things change a little, because it will be better if you do that not as an LLC but as a C corporation. And this is very simple. Remember that whenever you have flipping, that is not capital gain. Capital gain is only when you buy a property and you keep it for over a year and then you sell it. Then you get a capital gain, and then you get a reduced tax rate, probably 15 or 20%. But for a flipping in a company structure, if you do that with an LLC, that will be regular income, and not only you will be taxed with income tax, but also with self-employment tax, because LLC, when you have an LLC and you are doing an active business, as a flipping, that's an active business, different from a rental that is a passive activity. When you do an active business like flipping, then there is an additional self-employment tax of 15% that you will be obligated to pay. So whenever you have a flipping business, the company structure is not an LLC, but it's better to have a corporation. Now, in a way to reduce the taxes within the tax principle that we have seen, there is also some options, like, for example, 1031 exchange. The 1031 exchange involves the changing of one property, of the investment property that you have for and another investment property of the same nature. This is and the virtue of this exchange is that you will pay no taxes. But remember, this process is something that is to be very careful. You have to have an accountant, and you also need a good title company and find a property to do this. Meaning that you probably have the period is 180 days, and you need to find the property and do the exchange for this to not pay taxes. In terms of reporting, for example, many times clients say, how do I pay myself, a real estate investor, how do I pay myself? And the answer is very simple. You need to pay with a W-2, like any other employee. We have the case of a client. He came and he was worried because he was not paying salary, and then he decided to actually pay himself. The thing is that the previous year he was not paying any kind of salary, and then the IRS audited him. The auditor came, and then he provided all the information without any reserve. The case was solved. He paid all the payroll back taxes, and he was clean. But then remember, it's better not to go through that process of auditing or waiting for an audit. You need to pay a W-2 like any other employee. You need to pay a salary to yourself and pay payroll taxes. And this is to safeguard your investment and not getting involved in any kind of audit or inspection with the IRS. It's better just not to play that. It's very complicated. So just as a safe, like a safeguard method, you need to pay at least 50% of the profits of the company. Meaning that if you are making $100,000 a year in profit of the company, you pay yourself a salary of $50,000. And you pay payroll tax, meaning that you pay yourself W-2 like any other employee, and then you pay the payroll tax on a quarterly basis, and then the unemployment tax at the end of the year. After the tax reform, for example, all the real estate owners need to send to the tenants 1099s at the end of the year, or at the beginning, January 31st. This is for the famous 199A deduction. This is the 20% business deduction that real estate investor can take if they comply with the IRS. Remember, there is also a requirement for this. To take the 20% deduction, business deduction, 20%, you need to have at least 250 hours of qualified, regular, and valid hours that you have input as a real estate manager and investors in your property. And this needs to be proof, and it's very useful for you to have a journal. This is in regards to the new tax regulations that the tax reform were created, this 20% deduction. So remember, you need to provide 1099s to tenants at the end of the year to take the 20% deduction. And in addition, you need to prove and have a record of at least 250 hours inputted in the business as an activity, as an active manager of the business. And then at the end of the year also, there's the tax return. Now remember, the tax reform changed the dates when you have to report your taxes. For example, LLCs and S corporations need to report in March 15. If you have a corporation, if you're doing flipping, we advise doing in a corporation, the deadline for that changes to April 15. And remember, in addition to having the federal income tax return, when you have a C corporation, you need to report to the state as well. The corporation report to the state and to the federal government. LLCs and S corporation report only to the IRS. So remember, this is key with the tax changes. This is key. There's also another tranche of the tax reform, that is the opportunity zones. We will explain that in a different video, but basically says that if you are going to invest in an opportunity zone and you want to take the deduction after the 10 years and then pay zero taxes, you need to first of all invest in an opportunity zone, and then you report the investment to the IRS, and also you need to invest in assets within the opportunity zone. And this is something that sometimes is not very well understood. We will explain that later in another video, so check for our updates. Now, following the case of this client that he was not reporting correctly and then he was paying more taxes, we offer some packages for accounting, precisely to cover the fact that sometimes clients are not doing their accounting month to month. So we provide that service for the clients. And to give an example, we have clients that are here in the United States and also clients that are not in the United States, and they have 3 properties, they have 5 properties, they have many more properties. And in that case, we have designed a specific package for each one. For example, the silver package, it involves only one account. This means that one bank account, one credit card, but also up to 3 properties, meaning that we will provide you with the software, you will be able to see the financial statements, and in addition to that, you will be able to see the actual profit for each of the properties that you have. So we will provide a financial statement that is not only the one that will tell you what are your balances, but also what is the profitability of each of the properties within the software that we use. Now, for the gold package, in this gold package we still have the same structure, but then we have increased when you have more bank accounts. For example, 3 bank accounts and 3 credit cards. For the platinum, this is a larger scope, including the tax filing, meaning that this package will include the tax filing for the end of the year. If we do this month-to-month basis, the tax filing will be included in the fee, and you will not worry about this. If you have any questions, leave us a comment here in our YouTube channel. If you can also see our videos that we have, and click on our reproduction list to see more videos, and subscribe to receive updates when we post new videos. If you want detailed information about this topic, visit our website at the address that is on the description box on this video, fastcpnconsultant.com, and send us an email.